Hey everybody, ready for part 2 of Little Money? Micro Entries? And if you missed part 1, it's available on the Payments Professor YouTube channel. And, well, if you subscribe, guess what? You'll never miss a class. At least I hope not. All right, in the last class, we defined what a micro entry is and why the industry uses them. Well, in this class, let's look at the formatting and origination requirements. Yeah! Okay, maybe it's not that exciting. But to get started with the new rule, we're going to see that it standardizes the formatting for micro entries. That's really important because it helps us in identifying them. First, we have the requirement that the originators use the company entry description of ACCT Verify. That's short for Account Verify, in all capitals too. This helps RDFIs, or receiving financial institutions, and the software they use to be able to easily and quickly identify micro entries. Now, we also need to make sure that we have the proper company name. Now, the company name needs to be easily and readily identifiable to the receiver, and it needs to be similar or at least close to the company name that will be used in future entries. We don't want things returned because the receiver doesn't know who an entry is coming from. So having a name that's known to them, well, it helps remove some confusion. But if you do have minor variations between the micro entry company name and the actual company name for future transactions, that's okay, but let's keep them minor. There are also some origination requirements. First, an originator that is using debit micro entry offsets must send the debits and the corresponding credit micro entries simultaneously. And that's for settlement to take place at the same time. Wait, what? Yeah, see, if you send a micro entry credit to test and verify an account, then you want to get the funds back with a debit, and that's called an offset. Well, you need to send that offsetting debit along with the credit so everything works out and balances out together. The easiest way to do this, send both at the same time in the same file. Ah, magic. It works well if you do it that way. Another requirement is that the total amount of the credit micro entry must be equal to or greater than the value of the debit entry or entries. This really means that the aggregate total of the debits and credits cannot result in what we call a net debit to the receiver's account. You can't be taking out money to verify an account. The purpose of the debit is only get back the credit you put in. You can't take out more than you put in. The debit, again, cannot be more than the credit. Something else to consider, if you are originating micro entries, that is going to be that an originator using micro entries may initiate future entries to the receiver's account as soon as the originator's process for validating the amount of the micro entry has been completed. That's awesome. And what's that time frame? I don't know. Wait, what? Well, the reality is that the originator themselves is going to have to decide that, yes, this process is completed, because they are in the best position to know when the validation process is complete by when they receive the actual micro entries back. And finally, it's really very important to note that a future entry may not be originated at the same time as the micro entries. Give it some time in between, especially in case there's a return or anything like that. Know that it's happened. Usually it's going to be a day or two at least, okay? Wait for those entries to come back before you actually initiate live transactions. And you want to be able to send those live transactions after the micro entry has done its process of verifying everything. And the last part of origination of micro entries to be aware of, and it's going to happen in phase 2, is where the new rule applies risk management requirements for originators of micro entries. Risk management requirements? What are you talking about? Well, first off, an originator of micro entries must conduct commercially reasonable fraud detections on its use of micro entries. We use this pretty much in everything, including the monitoring of the forward and return volumes of micro entries. This is part of the rule that requires an organization using micro entries to use what we call reasonable methods to be able to recognize and prevent suspicious activity. I do want you to know this is actually a little different and not the same thing as what we see with web debit account validation, but it's similar. It's also going to be required to have monitoring of forward entries and return volume, and at a minimum, establish a baseline for normal activity. which is something you should really do as a sound business practice on all the payments whenever you can. We're just making sure it gets applied to micro entries. But do know that it is not to be required to perform an entry-by-entry review. However, you do need to have velocity monitoring in place as well. Now, as a reminder, this rule becomes effective in 2 phases. Phase 1, September 16th, 2022. And, well, that one covers the definition, the formatting requirements, and some other origination requirements that are going to become effective. Well, the origination requirements we just went over, they become effective in phase 2, which is March 17th, 2023. And that is when you'll have to have the commercially reasonable fraud detection and origination in place. And that again includes the monitoring of forward and return volumes. However, you can do it before the deadline. In fact, I would encourage you, and Nacha even encourage you, to have it in place before then. Wow, that was a lot of information on micro entries. Okay, if you do want more, maybe on a different subject, email me, kevin@paymentsprofessor.com. We're here to serve you and help you by creating exceptional education that's fun, entertaining, and engaging. I'll see you in a future class. For now, class dismissed.